Hello and welcome everyone. Steve here with TradeForexForProfit.com. Today is Tuesday, October 9th, 2018, and we're looking at the pound US dollar on the 4-hour time frame this morning. We opened this trade yesterday. It is a break retest, and I'm a little late starting this recording. However, a couple of things that I want to point out here to you guys today, and it's important that you understand this. All right, this is the push point. This is the breakout as the market returns. Engulfs, bullish engulf. We're going to, this is T1, this is T2. We're going to go to T2 with this trade, and the reason is, now there's manifold reasons for a T2 target. However, just to keep it simple, for those of you that are not members, we're moving with the break. There's the break. The market returns. We're in the same direction as the break. So that is one of the primary reasons that we're going to target T2. Okay. So let me talk about the levels. All right. So when you're marking your levels, and let's say this, I think this is a good push point where the market pulled back and then fell again. Remember, as the market is falling in this case, all right, everybody is looking for places for the market to pull back, get bearish again so that they can re-enter, or stall. In this case, it stalls and then it gets bearish again. So what are they doing? They're selling right here, and they're putting their stop loss orders right here. So as the market returns to the level, the stops are hit. And also, you're going to see stalls or large-bodied candle moves through these levels that you mark. So if you mark the level, let's assume that we mark this level. When the market returns to that level, you're going to see rejection. Okay, there's rejection. There's rejection. Okay, here's a large bodied move. Okay, that just means that you have this is confirmation that this is a valid level when you start seeing this happening. Okay, so here's another bounce point. Okay, when the market returns, look, you start seeing rejection, and then it completely rejected it here, right? All right, so it creates this new bounce point right here. As the market returns, look what happens immediately when it hits it, rejection. Okay, so that is your confirmation that you're marking your levels correctly. Okay, and after you do it for a little while, it becomes second nature. All right, so with this trade, okay, secondly, I want to talk about this because this is a big item of interest in the forum, is second chance opportunities. What if I'm not there during that close? What if I'm asleep during the close of that candle? Well, the majority of our trades are going to be pending orders. Okay, and those that aren't, the majority of those pull back, okay, and retrace the area. Okay, so here's the area. The entry was right here. The market pulls back. So here's one period, here's two periods, here's three periods that we were beneath, okay, the original entry. So all you have to do is drop down to a, let's say you walk into this and the market's down here somewhere, okay. Just shift down to maybe the 15-minute, wait for a bullish engulf or a spike candle or some indication, a higher close, okay, than a previous candle, something of that nature, and that's where you can jump in and get a better entry, and maybe your target is right here now, okay, because you got in down here and missed the original setup. That happens a lot. So just because you can't be there for the close of every single candle, it doesn't really matter. The method is still completely functional. Welcome back, everyone. It is now Wednesday, late afternoon, October 10th, and the market took our 2 times profit. However, what I want to show you, this is just the ebb and flow of the market. There's your 2 times profit target. It was hit right here. Immediately forms a sell spike candle at this bounce point. I jumped in on a pending order to sell. The market pushes right through, takes my stop loss, and I'm down one position. So collectively, you were +2, -1. You're still +1 for this pair thus far this week, with 2 days left to trade. So that's how it works, and I just want you guys to see that, because there's losses. You're going to take losses, but when you take a loss, you're taking a 1 position loss. Okay, so if I have this set up for my stop loss to be equal to, let's say, $100, okay, it's always going to be equal to $100, right? That means my 2 times profit is equal to $200, right? So when I lose $100 and gain $200, I'm still plus $100. Okay, so the key to the strategy is maintaining a constant stop loss, which is really easy to do. We have an Excel calculator that you just open it up, all the pairs are there. You just look right on there. It tells you exactly based on the stop loss size and the position that you're going to take, how much to enter, and it's completely dynamic. So you can add your own numbers and values for whatever you want your stop loss to be every time. Okay, so it's real simple, and you'll come to see that. Let me zoom out. This is what is happening now. Okay, we're looking at the stop forming right here. Okay, at this point, well, the market maybe just wanted to go up here. All right, you see how this was an area where we fell, moved back, took the stops. Okay, this is an area where there's a lot of orders sitting. So perhaps the market's going to move up here, and we're going to catch a trade from right here. All right, and have another 2 times winner.